Welcome to Build to Scale e-commerce show by Atkins Agency, and today we'll be interviewing Chase Harmer, a successful serial entrepreneur, investor, speaker, and CEO of PayCertify, a worldwide payments company. And today we'll be talking about how you, as an online merchant, can choose the right payment processors and increase your revenues by up to actually 10% through frictionless worldwide payment processing, automated virtual cards, and secure fraud control. So, hey Chase, super happy to have you here today.
Yeah, it's nice to be here. Thank you for having me. I'm excited to do this.
Perfect. Let's shoot into the first question, right? So, I'm interested to hear more about payment processor comparisons. Usually this is kind of like a big question that a lot of e-commerce owners have, and especially, when they're choosing the payment processor. So maybe, is there like a few key elements how the business owner should choose the right payment processor for himself?
Sure. Well, I think it starts with the kind of currencies that you're accepting, where you are buying your traffic, and the type of product that you're selling, whether it's tangible, digital. I think there's certain banks that like those types of clients more than others. So with us, we're registered with about 15 different institutions. So because we never know what's going to come through the pike. So we essentially, when it comes through our model, we essentially pair it with the right bank on our back end. And then we implement all the fraud and prevention and all the other good things that we do as like card issuing and those things. But I think really what's important is the value that you're getting from the processor, not necessarily pricing schemes, although it's super important. A lot of the guys that we work with in the media, they're selling B2C products. And I think B2C, if you're selling B2C, there's raw cost that's very inexpensive for those consumers. And if you're working with a Stripe or a PayPal type partner, they're typically charging a 2.9 and 30 cents. So, and just for sake of numbers, raw cost on a consumer-based transaction, a regulated debit, is 5 basis points and 22 cents, okay, in the US, which means on a $100 transaction, that costs you 27 cents, okay? Whereas with Stripe, that same $100 transaction, $3.20. Huge difference. So, and that's with buying US traffic. So I think there's things like that definitely raw cost makes a huge difference, but the value that you're getting, what other products and services are you getting that's helping you do better, make more money, and increase your average margins, right? So.
Okay, and maybe there are like any hidden traps, when you're like choosing payment processor, especially, if you're talking about popular payment processors, Stripe, PayPal, etc., something that like a typical e-commerce owner might not think about as a first step.
Well, I think the reason why most e-commerce entrepreneurs go to a Stripe initially is because it's easy. You get an account and you can get off to the races. There's other companies like ours that do the same exact thing. However, Stripe has a formula where they really don't understand the business. So like if you're a guy that's able to scale a business super fast and go from 0 to $1 million in a month or 2 months or 3 months, that's unusually better than the normal algorithms that come through their system. So if you're a guy that can scale, typically what will happen is they'll hold your funds, right? So because they don't understand who you are, what you do, or what you're capable of, where we actually work with our merchants and we understand the merchants that we're boarding. So we're able to really give you the volume and capacities that you need in order to scale to the next level without the similar type of problems that you have. I think that's the most common that you'll see out there is frozen funds. And PayPal does that a whole lot, and so does Stripe. But just because they're doing massive scale, they have to build algorithms because they don't know who you are. That's the biggest problem that they have for guys that can scale, right? So.
Okay, so you mentioned like very interesting thing, we have this kind of like simplicity to start with, right? Mm-hmm. But you as a PayCertify essentially offers more personalized approach, but at the same time, is it much harder to get with Stripe versus you guys? I mean, you versus Stripe.
Well, it just depends on the nature of the business, right? So if you're selling a tangible good and you're in Europe, US, or Canada, those are three countries where we can really, in regions where we can really own the process and do it very expeditiously. Outside of those areas, I think that Stripe is probably quicker than we are. I don't, we can do those types of areas, but I think it takes a little bit longer time because we ask for a little bit more due diligence in those areas that we're not comfortable with. But in Europe, Canada, and the United States, I feel like we can, with tangible good businesses or people that are selling a digital product online, we absolutely can compete head to head with them. And offer more products that'll help you marginalize your business in a better way.
Okay, that sounds actually really good. And you mentioned also another thing, when a business is scaling fast, we usually get flagged in Stripe, PayPal, etc. And these are kind of like problems that a lot of our clients faced. So
Sure.
what we did is actually have a few different payment providers and start dividing the payments, right? So for example, part of a week, it would go to one payment provider, another part to another. Is it a good strategy to do, or is there like a better solution?
Well, I'm not technically supposed to say that that's a good strategy, but I guess it kind of goes against what the car brands want. But the reality is, if you're a merchant that's scaling, okay, and if I was in your guys' shoes, which I try to put myself in my merchant's shoes all the time, so we can provide better products and services that fit them. You absolutely need to have redundancy in your business, right? So no matter if I want all your business or not, I feel like you should even. I call it balancing, so you can balance your, and it's really just because if you have all of your eggs in one basket and you're doing a tremendous amount of volume, and for whatever reason, it could be totally wrong, right? They hold your money or they put your account on pause, you are screwed, so because you can't do anything. But if you have redundancy in your business, then you can continue to operate and just shut that one down for the time being and say, hey, listen, we'll resolve that crap, whatever that is. Well, let's keep doing business as normal, right? And so I believe redundancy is 100% something that everyone should employ and implement.
Yeah. Just essentially diversifying all the eggs, not putting all the eggs in one basket, etc.
Yeah, I mean, I think when you're starting and you're trying to figure things out, you don't need like 5 processors, right? But as you grow, you certainly do, because you never want to have someone else, because your processor really kind of, it can control you, right, as a business, right? If you're restricted there and that's all you got, like, you're basically have to bow down to whatever they say. I think you got the whole leverage.
Yeah. So I have seen horror stories, like funds being frozen for like 60, 90 days, etc. I mean, for a fast growing business, that's lethal.
Dude, if you're sending a tangible product and you've already sent that stuff out, like that capital is gone, right? And you're like, dude, I need my money. Like I got to payroll, I got all this other stuff. So I mean, I get it. It's like so that's why we're really merchant focused, like on that type of stuff, because I think that's the kind of stuff that can absolutely murder a business right when you're starting and right when you're starting to gain momentum. So yeah.
Cool. Let's hop maybe into, advantages of a right payment processor, besides the general obvious things. So one of the things we have talked before, that really kind of like seemed interesting to me, it's virtual cards and a cashback ability, to get back, a few extra percentage of revenue from what you're, let's say, spending on advertising. And, in our experience, just getting back like 2 or 3% could be a huge difference, like 10, 15% lift in final profit that business is making. So, maybe you could explain how virtual cards work, what advantages does it have over like regular cards, etc.
Sure. So virtual cards, so we're the first platform and we're also backed by Visa too. So we have the power of Visa behind us, which we can actually give more rewards and enhancements to the consumers, the merchants that we service, and even do like for the right size merchant, we can absolutely come in there and give some cool stuff away to actually enhance the ability to convert sales inside of your funnel. So I think there's some really cool things we can do there. But the reason why we started to become an issuer was because I was big into online travel space. Okay, in the online travel agency space, we were trying to solve 2 problems. Okay, number 1 problem is that the online travel agency, let's call it Expedia for now, right? They're just a broker, right? So the broker essentially still need to contact the airline. They need to deliver a ticket in real time. That particular problem, because the money has not been settled yet. When you go to buy a ticket, the money's not settled yet, right? So Expedia doesn't have the ability to pay the guy right away. And the other thing is there's so in addition to that ticket not being solved, us being able to issue a ticket in real time and pay that airline, we solved 2 problems. The second problem was actually the cost that you incur as a person that's selling goods on the front end. So Expedia in this case is incurring that 2%, just like any e-commerce merchant would incur 2% by, or we're just using 2% as the number. If you're with Stripe, it's higher, so it's 2.9. Yeah. If you use 2%, because there's a cost there. When we pay that supplier on the back end, we create another cost because we're the issuer of that card. I give 2% back to our Expedia example here. They paid 2%. I paid the supplier. I generated a ticket in real time, so the consumer's happy. He got what he needed, and I used the interchange on the backside of that transaction that I created by paying that supplier to offset the cost with Expedia on the front end. So we essentially eliminate the cost to process credit cards for that OTA and deliver the ticket in real time. Two problems solved: the problem of cost, the problem of delivering the service that's not yours, right? So if you think about that, the gig economy model and any e-commerce business that's selling something online that they're housing at a fulfillment center or somewhere the third party's warehouse, it's the same exact thing. You're either buying it in bulk, you're buying it in, you can do it on a one-off, we can split transactions. So yeah, I think, it's a really big differentiator for us. And I don't know if I lost track of what the question was.
No, it's fine. I mean, it's super powerful thing, even like 2%, right? It's huge number because we are like doing numbers for our clients backend, right? And average e-commerce store has, like 10 to 15% of our final revenue as a profit. Mm-hmm. So just by saving 2% of this is a huge thing.
Well, so in the US, you guys, most of you guys, if you're buying traffic in the US, you're buying US customers, you're paying Facebook or Google, right? Now, those companies are US companies. So when you pay them, you're actually getting a cost. You're getting a foreign exchange cost and a cross-border cost. So not only are you not getting cash back, you actually are paying foreign exchange and cross-border on those transactions. Through our platform, you have access to Canadian bins, European bins in 7 different currencies in Europe, as well as US. The US, we actually can maximize your rebate because there's more interchange in the US. So we'll give you up to 2% as long as you're processing or are spending over $100,000 a month. If you're spending less than $100,000, we'll give you 1.5%. Okay. If you're if you're selling in Europe or you're selling in Canada, we give you 0.5%. Okay, if you're selling less than 100,000, and we give you 1% on your spend if you're spending 100,000 or more, right? And right now in Canada and Europe, you get nothing. So I'm actually giving you guys 1% on your money, and not to mention you're not paying foreign exchange and you're not paying cross-border. So it's actually like a 2.5% win because you're not paying that 1.5% for foreign exchange, another 1% or 0.5% for cross-border. And you're actually using the cards and earning cash back on those cards. So it's a huge win for anybody international that's spending money in those areas, right?
Yeah, this is exactly why I wanted to have, you on this podcast, because it's such a, valuable opportunity for a lot of businesses to utilize but are still not using it. Because, everybody is still left in this thinking that you have to use, let's say, a bank credit card, etc. But because your fees are relatively high, or even a cashback doesn't do the trick. And some of our clients, what we do is we just go and do bank transfers. This means every week we're just transferring money into Facebook, especially the ones that are like spending higher amounts, like 30, 50K a day. We're just doing direct transfers. But with a solution like yours, we could be saving on that.
Well, even think about this, right? Because we're actually connected to Visa Direct, which are one of 17 companies in the world that has this ability. And what it actually allows our customers to do is press a button inside of our console, and that button you can instantly send up to $50,000 for less than $5. So that's way cheaper than that's on the market, and it's instantaneous because you would go from either a credit card or a debit card into a media campaign, right? So we'll have that, but we also have an FX account too. So if you're in an area where you need to change out a currency because you need to spend in Canadian dollars and you are from Europe, you have to change that currency. We have the ability to do that through our FX conversion tools. And that's about 1.5%, but it allows you to do that currency conversion, and you can do it instantaneously in fund accounts within hours. So like from anywhere. So it's pretty baller. And we're pretty proud of it. So
yeah, exactly. I mean, it's a relatively cool feature. And maybe we can talk about another important thing when scaling e-commerce business. And in my experience, it's speed of payouts and just having lower reserves. Because when you're like trying to push a business relatively fast, right? If somebody's freezing money for you for like even 30 days, it means you might run out of stock, you might have to downscale, etc. And this is kind of like the problem that we are often facing with a lot of clients if you're like trying to push them, especially from smaller amounts, if you're like making 100K a month, and we kind of push them to like 300, 500K. And, in a month in, we're practically, running out of stock and not being able to reorder because, the reserves have to be kept.
Mm-hmm, mm-hmm. Yeah, I mean, in you were also talking about payouts. Yeah, I mean, you have affiliates too, right, that are pushing traffic for you potentially, and you want to make sure that you can pay out. So the cool thing about our pay in feature, you can push money into the system. You can also use that to pay out all your affiliates in real time, instantaneously, same day, weekly, whatever, and you can do it for the same low cost, up to $2,500 person, and up to $50,000 on the B2B, which you're a business to another affiliate's another B2B. You can do that specifically card to card within seconds, through our system. So.
Okay. And, what are like maybe some industry norms for like speed of payout and like reserves being kept?
So going back to, I think we're talking about processing now, right? Back to processing.
Yeah.
We're talking about issuing cards. So payouts, depending on where you are in the country and the world and what your type of business is usually 48 hours to 72 hours. So, which is 2 to 3 days. And it just depends on the type of business that you are and the risk. We don't do reserves unless it's warranted beforehand. So we'll understand the business and the type of business that it is. And of course, there's businesses of all sorts online. So I can't say no, there's no ever reserve. Of course, there's going to be times where there's a really high risk account that deserves one, right? So you never know what's coming across it, but there's nothing mandated out of the gate. If we see that it's warranted for a business, we will ask for that reserve up front. That the documentation up front, not a reserve up front, but like an ongoing if there was one required. But typically that's not the case. So
yeah. And PayCertify kind of like offers this like 24 hours payout. So compared to like industry 48 hours to 72 hours, this is also like relatively big app.
We can do 24 hours. So essentially, like I said, the normal standard, if it's not warranted or, typically we'll go 24 hours as long as there is volume there. If there's volume in a business case and it makes sense for us to do it, of course, we have the ability to pay out. We're going to even have the ability to pay out same day. So essentially, for the right merchants that are selling the right type of stuff and have the right track record with us, we actually can do same day payouts too. So.
Okay, that sounds actually really good compared to like industry. And maybe there's like another, very often overlooked thing, and it's called fraud protection, right? So, maybe let's start, for some maybe beginner e-commerce merchants to get a glimpse, what does the fraud actually look like?
Sure. So in our system, it's fully automated. So what we're really good at as a company is processing credit cards and issuing credit cards, right? We're really good at that. And what we've done is we've worked with the best in the business inside of the fraud prevention arena. So enterprise level fraud prevention that would cost you $10,000 upfront to just set up and then set up the rules and all that stuff. We're fully integrated with Count, and we're fully integrated with frictionless 3D Secure, so the 2.2 version. The cool thing about that is there's a lot of consumer fraud that happens, right? So the consumer fraud, the frictionless 3D Secure, and you guys are in Europe, so you guys understand 3D Secure, but the frictionless version is pretty badass because now you don't have to ask for anything at the point of sale. There's no additional boxes. Essentially, it just automatically converts shifts the liability, creates a handshake, shifts the liability to the consumer, to the issuing card bank. And we actually give you the liability shift. So there's no chargeback on that, but you also get the interchange basis point reduction. So one thing that you're not getting with Stripe is, and I'll just use this as an example, is because you don't get the interchange basis points reduction when you do a frictionless 3D Secure transaction because you get a flat rate with Stripe. Because they're giving you a flat rate of a 2.9 or whatever, you only get the basis points reduction, which is up to 30 basis points on a rewards card, right? Up to 30 basis points cost reduction on those transactions. You don't get it because you're not getting the raw cost of interchange. So with us, you do get that, which allows you to take advantage of those interchange price drops, which if you're doing millions of dollars, that 30 basis points is worth a lot of money, right? But not only that, it works on reoccurring transactions. So 3D Secure used to just be working on the first transaction. Okay, so consumer takes an action, the liability is shifted. Now, and Friend Finder is one of our clients. They do over 700 million transactions a month, but it's all reoccurring. So, what a client will probably do on a reoccurring subscription is after 5 months, he'll call in and say, hey, I never did any of those transactions. That wasn't me, right? Because when it's reoccurring, there's no more, kind of confirmation. Yeah. So they'll rip through 5 months of chargebacks at one time, Now they can't do that because on every single reoccurring transaction, a token is created and you can't actually go back there. So the liability is shifted on every transaction now. So so it's pretty baller. So not only do you get the interchange reduction, but you get that safety that those reoccurring transactions are going to be safe from consumer fraud. So I think eliminating it on the front side, and of course we do the back end chargeback mitigation as well. So we do all the representation for the clients. And if you have a scaling business, managing the chargebacks on the back end is a pain in the ass. And most of the time people lose, right? So you spend a lot of time working for something that you don't get a return on. So we actually are like kind of your outsourced chargeback department, and we can manage all that stuff for our clients. So that way they don't have to. And we guarantee a win ratio that's better than what they're probably achieving on their own.
Okay. And, let's say how often this fraud is actually happening. Maybe you have some numbers, statistics, etc. Maybe how much of a revenue typical e-commerce store is losing to fraud.
So 2% of the gross revenue of any company, up to 2%, is basically lost off the top for fraud. 2%. I mean, that's a huge number, like worldwide. That's a huge number worldwide, it's continually growing every year. Even though they did the chip card stuff, the thing about e-commerce merchants, guys, they did the chip cards so people stopped committing fraud in person. But now nobody's in person; everyone's behind a computer because of COVID, right? So like, you have the amount of purchases is going through the roof, right? So, but there's all the fraud is shifting online. So it's just it's an aggressively growing number, and now because of the pandemic, it's even worse. So if you're out there and you're a leader and you're doing a ton of volume, guess what? There's people out there that are like eyeing you, and they have
looking
automated
for free products
to see if they can poke through holes. So and if you're weak and you have a hole somewhere, they'll find it and then boom, they'll exploit it, and it happens like it happens like quickly. You know what I mean? And if you don't have the systems to defend it, you can overnight, you can almost be screwed, Yeah.
So. And I mean, even for smaller businesses, I guess, we could still survive without that. But if you're like doing a little bit more serious volume, etc., it's a vital, because like even 2%, right? It's a huge amount, if you're like making $1 million a month, right? 2% is like what, 20K, right? 20K.
Yeah, exactly, monthly. But if you think about it too, because you have to have, in order to do that type of volume, you have to have scalable processes. And if you have scalable processes, that means you have a lot of automation. And if there's a hole in that automation and you don't know about it and it gets exploited, that's when you get screwed.
You get burned.
You are doing super volume, and it's just like the boat's leaking and you just no one's actually scooping the water out.
Exactly. So Chase, we kind of like really shotgun it through all the questions pretty much that I have prepared. And I think we kind of like covered three major areas that I think, a business owner really needs to know about, like payment processors, etc., and why you're like, a good and worthwhile investment. So maybe, you can talk more about, where people could find you, learn about your product, etc.
Mm-hmm. Yeah. So you can find us at paycertify.com. I'm going to put up a link for everybody in this group so you guys can take advantage of a first bonus deposit. We'll be kicking in some money for, everybody that joins. And we have a sales division. So depending on what your needs are for your business, if you're an e-commerce owner, or if you're just looking to make some additional capital and arbitrage on the spend of your ad spend right now, go to paycertify.com, contact me at chase@paycertify.com, and we'll get you in contact with the right people so that way we can help you in your journey.
Perfect. So Chase, thank you for your time. It was really educational in some ways.
Good. Well, I'm glad I could be of service. And if there's anything that you need, please let me know. Thanks, Darius.
Awesome. Cheers.
Bye.